We want to welcome you to our call today with Ed Newton, CPA, CFP, and President of Newton Financial Network. The title of today's call is Maximizing Your Social Security Benefits, Part 1. And if you are listening on the phone, if we have time at the end of the call, we'll open up the phone lines so Ed can answer any questions that you have. Or if you're listening via the webcast on the Internet, there is a box towards the bottom of the page titled Submit Your Question for the event here. Just type in your question and click the submit button, and we'll check those messages at the end of the call and try and answer those too. If you are not already a client of Ed's, he's originally from Huntington, West Virginia, has a degree in accounting from Virginia Tech, and a master's degree from Liberty University. Ed landed at Arthur Anderson and Company in their tax department and then began his CPA firm in 1977. He's a CPA and a certified financial planner, and is uniquely positioned to help clients achieve and sustain a worry-free retirement. And if you do know him, you know Ed's also been a commercial pilot for major airlines since 1982, and his current weekend routes are to London, England, and Frankfurt, Germany, I believe. Plus, he recently acquired the title of the rank of captain. So congratulations again, Ed. Good morning, and welcome to the call.
Well, thank you, Jeff. I appreciate that. And yes, I was a captain for 18 years, and then I went to the right seat of the big Airbus for a while, and now back to the captain for the next 310 days, 12 hours, 57 minutes, and 56 seconds. But who's counting? That is how many days I have until my official retirement age from the airline. Today, I want to first of all welcome everyone to the call. We have an extremely good response, which doesn't surprise me at all. Just about everyone from cradle to grave right now is concerned and interested about Social Security and their ability to get it. So I thought this would be timely to try to speak to some of that. And as Jeff indicated, I've slightly changed the title from what you received when you first got the email about this, and that's because I found that I could not just in a 30-minute time try to cover everything that I wanted to cover with you. So we've made it into a multi-part that we'll be doing for the next month, maybe in June for sure, and then maybe even have to carry it into July as well, because I do want to cover this as much as possible with everyone. As Jeff mentioned, we will take questions at the end if we have some time left over. However, I would tell you, and you'll see on the very last slide when we talk about it anyway, that if you've got any specific questions that relate to yourself, of course, this is not the best forum to do that with everyone else on the call. So what I would suggest is that you just call Sarah Beth here in the office and set up a time that would be convenient for you, so that you and I can talk about your personal situation. With that being said, what I'd like to do is to start out with a slide that is, as I say here, Social Security's own words. And this comes right from the handbook, if you will, for the Social Security Administration's personnel. Where it says the regulations require a notice for an initial determination contemplate sending a correct notice. That all sounds good. And then the italicized part, we consider that an initial determination is correct even if we send an incorrect notice. Now, if that doesn't sound like the United States federal government, I don't know what does. The point that the reason I wanted to put this slide up is the point is that the Social Security Administration admits right up front that they may not be giving you the correct information. They also are prohibited from giving any advice. So if you go, now they may do it, but the Social Security Administration does not allow them to give any advice. So if you go in and say, should I take my Social Security now or wait, they are technically not supposed to give you any advice. So you're on your own in that case, and of course we're here to help you to the best extent and the greatest extent we can. So as we move now to the next slide, you see that some information here I said where Social Security may be your largest asset, and that very well could be the case. I know we all think that Social Security is, we've paid into it for all these years and that we'll never get it out. That may or may not be the case depending on how long you live and when you take it, so that's what we want to talk about today as well. Social Security is immensely complex, and it really is. I knew it was complex before I really got into a lot of the weeds, if you will, on this for today. I did have a good understanding, I felt like, of Social Security, but once I got into a lot of the material that I researched and worked on, I found that it is even more complex than what I thought. And as you will see in a few minutes, making the right choice can mean tens to hundreds of thousands of dollars difference, and that's a literal number. I mean, it can easily be more than $100,000 difference to you. So making the right choice is extremely important, and we will certainly try to help you to make that best choice for yourself. One of the issues that we have is, of course, the biggest danger that we have isn't dying. We all think that's the biggest danger is dying, and that's not the case when it comes to Social Security for sure. It's living. And the dangers that you face with Social Security and in your years of retirement is, number one, outliving your savings. Of course, all of you that are clients of ours know that we talk about that almost constantly. Saving enough before you start retirement to ensure that you don't outlive your savings. And what I believe is the biggest concern, the biggest fear, the biggest obstacle that people should think about when it comes to their retirement and the amount of money that they have accumulated and using for retirement is inflation. That really is. That's more important than, being aggressive or conservative or being in bonds or stocks. Inflation is really the biggest problem that we have. So that's something that we definitely want to think about when it comes to Social Security as well. And then I want to show you here the claiming ages table, and I hope you can see it well enough. This really struck me. When I came across this table, which is directly from the Social Security Administration, I was really just blown away by this. If you'll notice what this is telling us, you've got your chart for men and women, and then for the years 2009 through 2012, which is the latest numbers that we have at this point, it shows the percentage of people that are taking their Social Security at the age from 62, the first year you can take it, up through 70 or greater. And as I say, it just has blown me away to see that at age 62 for men, anywhere from 38 to 44% each year have taken their Social Security at 62. For women, it's even higher. Now, in 2012, it was, quote unquote, only 43%. But you can see, other than that, it was almost half of the women that claimed in those years were 62 years old. That one column that is DI with the asterisk, that's just if you're taking, how many people were taking disability income. So again, by seeing these people take it at 62, we're going to see in a little bit later in our discussion that this could potentially cost them that hundreds of thousands of dollars that I was talking about earlier. I have changed my view a little bit in the last couple of years about when to take Social Security. And I have always talked, and some of you that we've talked in depth about Social Security know that I talk about the break-even analysis of taking it early versus taking it later on. And I'll tell you right up front, one of my 3 rules is you do not take it early if at all possible. I'm jumping ahead of myself here, but I want to be very clear, and I want to hit this 2 or 3 times at least during this time we have together, to say that taking it from 62 to your full retirement age, which for most of the people on this call is going to be 66, is just really a huge penalty. So we'll talk about that in a minute. But the Social Security Administration has determined from their records that the cost of the program is the same regardless of when the benefits are started. Now notice that says the cost of the program. That doesn't necessarily say for each individual, but just the cost of the program. So that's one thing to be concerned about. Then also, they maintain that the age 1 claims makes no difference in the overall program spending. Again, notice that they're using the word program spending. So what we need to be concerned about is our own account at Social Security Administration and our own spending. So the idea of the program is not necessarily what concerns us. And then you'll notice that there was a study done, at least one study, that concluded nearly 40% of the people who claimed the benefits early came to regret their decisions. And I can say that I am confident as we look at some of this, you'll see why that's actually the case. And again, our issue is outliving your money, outliving your savings. So on the Social Security's actuarial life table that you see now, if you look at a person that's 60 years old, take a man, let's just look at a man age 60, it is projected that he will have over 21 years left before he passes away. For a woman, naturally, it's higher, as the women, as we all have been told all these years, women do live longer than men. For a woman, it's over 24 years that she will live. So you can see there's a long time left in retirement. And this is going to be very important. And even at age 70, 10 years later, the average man will live another 14 years, and the average woman will live another 16 years. And in fact, if you take 2 65-year-old folks, a couple, the odds are extremely high that at least one of them will live to age 92, and there's a very good probability that one will live to at least 95. So again, if we look at age 65 as what we've typically thought of as a retirement age, there's a lot of years left in retirement, and we need to make sure that we've got the money and that we maximize the amount of income that we have for those years. And then something that I think all of us have been guilty of, I've certainly been guilty of it in the past, and that is thinking of Social Security as an investment, if you will. I have many, many, many times made the comment, the amount of money that I put into Social Security, I will never get back. And that's true. But I think where some of us, and certainly I've been in that camp before, have made a mistake is to think about Social Security as an investment. And we really shouldn't think of it as an investment. It's insurance. It's insurance for that old age. In fact, if you look at the title, Old Age and Disability Insurance is actually what the name of Social Security is, the OADI. So it is insurance, and just like insurance on your home, there is a very good chance that you're going to pay in more for the insurance premiums over the year than you'll ever receive in benefits from that insurance policy. But again, let's start thinking about Social Security as insurance and not as an investment. And I think it will help us to actually make better decisions when it comes to taking that Social Security benefits. So what do you think is what I most often hear in meetings with clients when discussing Social Security? Now, hold on a second, Jeff. Don't advance it yet for me, buddy. Thanks. When I sit down with clients and we go through and we talk about, let's say, Social Security, and we have a good discussion about what needs to happen and the different options and the different opportunities for Social Security, what most often clients say to me after we finish that discussion is, just tell me what to do. And I hear that all the time, and I wish I could do that. And here is what I usually respond with when clients ask me, just tell me what to do. It depends. Those of you that know me that know that the great majority of the questions that you ask me, I will respond with, it depends. And that is extremely important to know that your specific circumstances really do dictate what needs to happen and what you need to do. And that's why even in tax law, I'll talk about it depends on circumstances. In Social Security, it depends significantly on a lot of different variables that we're having for you. So let's talk for a second about the different types of Social Security benefits. And you can see from this list that there are multiple types of Social Security benefits. We normally think of the retirement benefits. Some of you may be familiar with spousal benefits as well, where your spouse can take Social Security based upon your earnings, and that can be either one, husband or wife, whichever one. And we will talk, it'll probably be in the next topic, but we'll talk more specifically about the spousal benefits and taking those as well. And then there are the spousal benefits for caring for an eligible child or children. As we move further down, less often used and seen, but certainly it can be, or it is one that's used by a lot of people. And the very last one, a lot of people are not aware of. A divorcee, and that can be a man or a woman, again, it is possible for them to get Social Security benefits, the spousal benefits of their ex-husband or ex-wife, their ex-spouse. So again, a lot of different types of Social Security benefits. And the first thing that I would like for you to do, each one of you, is to go to this website, socialsecurity.gov/myaccount. And if you already have set up an account there, that's great. If you haven't set one up yet, I would encourage you to set up the account at socialsecurity.gov so that you can go in and monitor your Social Security account. And that includes making sure that they post your annual earnings correctly, as well as giving you the opportunity to see what your updated benefits are. I could spend the next hour discussing with you and telling you how Social Security Administration computes your benefits, but even after that time, we still would not know exactly how they come up. I'm not sure if that's big enough for you to see. I hope it is, but this is actually, quite honestly, it's mine. I went into my Social Security account and just made a screenshot of what the estimated benefits are. And again, that is just an estimate of the benefits. And you can see that there is a large difference there between full retirement for me, which is age 66, and at age 70, the amount of money that I would get. Unfortunately, for our discussion here, I can't show you what the age 62 would be because I've already passed that point, so they don't show that. But you can see, even if I were to take it today at age 64, it would cost me something over $300 a month for the rest of my life. So again, taking it early is something that I really discourage people from doing. Now, when we talk about full retirement age, anyone born before 1943, their retirement age was 65, but those people are all over 70 now, so it really doesn't do any good to talk about that. But you can see those of us that were born in 1954 or before, we have a full retirement age of 66. And then starting in 55, for each year it goes up 2 months until those folks born in 1960 or later are actually have a full retirement age of 67. Now here's something that I think is very interesting, and I know I've talked to some clients about this, and that is the idea of suspending your benefits. It's really almost, I don't want to say an oxymoron, but it's counterintuitive, I guess. Let's take the example of a male who reaches his full retirement age of 66, and maybe he's going to continue to work. Potentially he's going to not want to take his Social Security benefit at this time because he wants to wait and have it get larger for each year that he waits. What is possible to do is he can go down to the Social Security Administration and he can actually just say, okay, I want to take my Social Security now that I'm 60. And as soon as you say you want to take it, you say, now I want to suspend it. All that does is to allow your spouse to now get the spousal benefits. So in the case we're talking here, it would be enable the wife to take 1/2 of what the husband gets as her spousal benefit and take that for the rest of her life. Now, there are some ages that the spouse has to be before she can start taking it and everything like that. But what is really attractive to me about this suspending the retirement benefits of the husband, in our case here, is that the increase that you get every year by waiting another year to take your Social Security benefits continues. So again, what you have is, full retirement benefits, let's say for this gentleman is $1,000 a month, and he goes and applies for his Social Security, but then suspends it and waits until age 67, then his benefits go up by 8%, so he would start with $1,080 a month, even though his wife is already collecting her spousal benefits for over a year. So a good way to maximize the Social Security benefits is to suspend. The next point I want to touch on is the earnings test, and that is extremely important. I get this quite frequently, especially from people who are thinking about this age 65 as retirement age. And in our what we've been thinking for most of our life anyway is that at 65 I can start taking my Social Security and get my Social Security benefits. Well, we've already seen that number one, if you do take it 65, that you will get a lesser amount, and a problem you have is if you're still going to be working is the earnings test. And that can be very detrimental into the fact that you could actually be taking your Social Security and not get it because of the earnings test. And there's two trigger levels for the earnings test that are very important to know. So before you reach full retirement age, so again, if we use 66 for those folks, that were born in 54 and before. If you take it before 66, then the benefit is reduced by $1 for every $2 of earnings that you have that exceeds an amount that changes every year. Right now it's $15,720. So let's just take someone that says, okay, at age 62, I'm going to start taking my Social Security because I'm afraid it's not going to be there. And so therefore I want to go ahead and start taking it now, get it now, so that in case that something changes, I'll still be getting my Social Security. So he takes his Social Security benefit at age 62, but that's not enough to live on, so he has to continue working as well. So he's got a job, and for every $2 he makes over $15,000, he's going to lose $1 of his Social Security benefits. So you can see right away that that could be extremely detrimental and would be one in which you could wind up really costing yourself a lot of money over the years, over your lifetime. Now, during the year that you reach full retirement age, 66 in our case here, the benefit is reduced by $1 for every $3 of earnings that exceed, again, the number this year is $41,880. But it's only for the earnings that you make prior to obtaining full retirement age. So for myself, as an example, with my birthday in March, it means that the year that I turn 66, if I make more than $41,880 before March 12th, then I would be losing some of my benefits. Unfortunately, that number is the same no matter when your birth date is. So if we take someone whose birthday is in October, when that person reaches 66, that year that they reach 66, they would be able to make the $41,880 only through October. So they would only be able to make that $41,000 through the month of October. So you can see that's a very big difference as well, just depending on the month that you're hired. And then, of course, we have the next one, and people will talk about that to me quite often. And basically, I just say, what, taxed again? Social Security benefits are subject to income tax based upon what your income is for the year. So if the combined income you have, which again is a bit of a calculation, but if you make between $25,000 and $34,000 as a single person, and that's $32,000 to $44,000 for folks filing jointly, you could be owing taxes on your Social Security benefits, paying up to 85%, paying tax on up to 85% of your Social Security benefits. And I want to make sure that we understand when I say that 85% of the Social Security benefits are taxed. I had a client the other day that we were talking to, and he was under the way that he had heard it, he was under the impression that if he made above these limits, that the tax on the Social Security benefits would be 85%. And that's not the case at all. The case is that up to 85% of the benefit itself could be subject to tax at your ordinary income tax rates. And that combined income is defined as the total of your adjusted gross income. So on the front page of your tax return, that's the very last line on the front page. So it's your adjusted gross income plus any tax exempt interest that you may be receiving, plus half of the Social Security benefits. So as I say again, it is substantial and can be subject to income tax, which would reduce, of course, the amount of money that you have. Then it should be no surprise to anyone that there are definitely strings attached to your retirement benefits. To take your own retirement benefits, you have to be 62 or over. To take the spousal benefits, so in other words, that's where one spouse goes, says, I want to start my Social Security, and immediately suspend it and have the spouse begin to take their spousal benefit. You must be over 62 to collect, and you must be married for at least 1 year. Divorcee spousal benefits, that's the other one that I do. Well, I want to also mention the widower survivor benefits. As a divorcee, if you want to take your ex-spouse's spousal benefits, you have to have been married for at least 10 years, not remarried from the time that you divorced this spouse, and you must be divorced for at least 2 years if your ex is not collecting their own retirement or disability benefit. So again, a lot of strings attached to being able to take these. And the same thing for a widow or widower, you have to be 60 to collect the spousal benefits as well. So here's one of the drawbacks that I want to talk about, and I think the most important thing that I'm going to really talk about today is that the drawbacks of taking your Social Security early at age 62. Now, I realize that some people are going to have to take Social Security at 62 just because of their own personal circumstances. And if that's the case, well, you know, I mean, that's the way it is, and you just have to do that. But a person that takes their Social Security at 62 instead of waiting until they're 66, full retirement age, the benefit was reduced, the monthly benefit's reduced by 25%, and that 25% is forever. It doesn't change when you hit 66 that you get the full retirement benefits of that. Another point I want to make right at this one before I go on about the age 62 is to tell you on the other side of that, if you do not take your benefits at age 66, or if you take them and then suspend so your spouse can begin taking the spousal benefits, from 66 to age 70, your Social Security benefits will rise by 8% a year. So that means those of you that turn 66 and do not start collecting your Social Security but wait till age 70 will actually have a benefit 32% higher than if you had taken it at age 66. And again, if we go back and think about the time that the average person will live past age 70, you can see that 32% a year would be a huge difference. And also recall that Social Security benefits at this point do receive the cost of living adjustment every year. So again, the longer you can wait, certainly the more money that you will be getting. Going back to the drawbacks of taking Social Security at 62 versus taking it later, in addition to the monthly benefit being reduced by 25%, that of course will also reduce the spousal benefits, since the spouse benefits are 50% of the retiree's benefits. Another one to think about that could be very significant is that if you start taking it at 62 and then pass away, your spouse, when she takes her survivor benefits, will or he will also receive a much lesser amount. And then the last opportunity that you lose by taking the benefits early is to really use some strategies that will, for couples, that will let you obtain more benefits over the years than you would otherwise. Well, as you can see so far, we haven't gotten all that far into it. We're talking some generalities, but I hope that this has been at least enough of an interest that it has piqued your interest so that you know that no matter your age, you need to be thinking about Social Security and to certainly make some plans for that. So as we've already run over a little bit over the half hour, but what I wanted to do is say that if you do have any questions about anything that we talked about today, or if you would like to go ahead and set up a time to talk about your own particular situation as it regards to Social Security, then just give Sarah Beth a call here at the office, and she'll be glad to set up an appointment, set up a time for us to chat with you in more detail about the Social Security Administration.
And we have set up.
Sorry, go ahead.
I'm sorry, Ed. We did have a question come through on the internet. If you're at that point where you want to.
Okay. All right. That would be fine. Yes. Go ahead.
Take that. And the phone lines are open also, so if you have a question, just pop in. But somebody asked the question, my husband is deceased. Can I collect spousal benefits even though I am still working and 65 years old?
When the spouse dies, it changes from spousal benefits to survivor benefits. So yes, even though you are still working, you would be able to collect the survivor benefits. However, we do have that caveat of losing the benefits if you're before your full retirement age. And so for you, I don't know exactly who we're talking about here, and it doesn't really matter. The fact is your full retirement age is at least 66. You say you're 65 now, so that means that it is potential, you could potentially lose some of the benefits if you start at 65, whereas if you start them at 66, your full retirement age, then it doesn't matter how much money you make in the year, your benefits aren't reduced. You may pay taxes on them, but the benefits themselves are not reduced.
And we have another question. My wife is 7 years younger. Can she take spousal benefits when I hit 65?
Yeah, that's unfortunately she cannot, and I'm in a similar situation in that most of you that know me, Millie is 8 years younger than I am. So when I'm 66, full retirement age, she will be 58, if I did that calculation right. So the spouse cannot begin taking benefits until age 62. That's the earliest that the spouse can start taking the benefits. I hope that
means yeah, in your case, that means she's 62, you're 70.
That's right.
Right. Okay. Well, let's see. Again, the lines are open. If you do have a question, just go ahead and say something, and Ed will field that question. And Ed, I'm checking on the internet. Those were the only two questions. Dave says thanks. And I think that's it from the internet standpoint.
Okay. All right. So again, if you want to talk about it, and I certainly would understand that, a particular person's specific circumstances are almost never going to be the same as anyone else. So if you would like to talk about your specific circumstances, just give Sarah Beth a call at the office and we can set something up. We have scheduled Wednesday, June the 17th at 11 o'clock for part 2 of this, and I'm going to go into more detail then on what I call the 3 rules to maximizing those lifetime benefits. You've probably picked up a couple of them just from what I've said in general, but we'll be talking more specific about those 3 rules for maximizing. So that ends it from my side. I appreciate very much everyone attending. Again, we had a very good audience, and I hope that you'll be able to join us next month for the second part of our Social Security webinar. With that, Jeff, I'll turn it over to you and tell everyone have a good day.
Okay, again, thank you for being on the call. This was Maximizing Your Social Security Benefits with Ed Newton, CPA, CFP, and President of Newton Financial Network. And again, if you have any questions, just call Sarah Beth at the office, 704-552-8689, or email Ed at, I think we're using Ed Newton at ednewtoncpa.com. That's probably the best email, right, Ed?
Yes, Ed at ednewtoncpa.com.
Great. Thanks again, everybody. We'll hope to talk to you soon.